Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about CCIV and its rumoured merger with Lucid Motors. Now I wasn't sure if I should be filming this video and if I should be posting it, and I've actually filmed it already once but deleted it because I'm not sure how this is going to be received. However, I've reflected on it and I feel there's certain things that just have to be said that no one else is really talking about. Now before we go any further into this video, I do need to say that for full transparency I am invested in CCIV. I made my investment at a much lower stock price than it currently is trading at and a much lower premium to the net asset value than it's currently trading at. In this video we're going to talk about the key things we need to know and be aware of. We'll touch on a few things that no one else has discussed yet on YouTube and also a couple of things that people have discussed incorrectly. If you are interested in this SPAC, then you definitely don't want to miss this video. CCIV is the fourth SPAC from Churchill Capital and is currently rumoured to be in discussions with Lucid Motors, the luxury EV manufacturer. So currently this is a rumour. Yes, the rumour comes from a good source, being Bloomberg. It's reputable, has a good track record for being correct in these instances. However, we have to remind ourselves that it is just a rumour. Even if they are in discussions, it doesn't guarantee that we will end up in an LOI situation or even a definitive agreement. There are lots of examples where these discussions have been held and it hasn't resulted in anything. In this video, we're going to touch on the valuation, where we are currently in the process, what we actually know about Lucid Motors currently, and why at this point in time insufficient information exists to do proper diligence. So ultimately, everyone is guessing and firing from the hip here a bit. We're also going to discuss the key things we want to see from the investor presentation and the potential key red flags, all of which could have a massive impact on the stock price. We'll also look into who the current investors in CCIV are, and importantly discuss what this means if the merger does go ahead for the stock price at completion. As part of this, I will be sharing some screenshots which I haven't shared with anyone before. To get hold of these, I did have to sign up to a $3,000 a month subscription. So if you appreciate that alone, please smash the like button. I often find when I do put out videos like this, I do end up with a lot of dislikes from keyboard warriors. So smashing the like button is so helpful in offsetting that negativity. If you're new to the channel and like investor related content, then hit that subscribe button. The algorithm is not a fan of my unpredictable upload schedule, and as a result, a lot of people who are subscribed don't see the videos on their homepage. And if you hit that bell next to the subscribe button, hopefully that should make sure that they do turn up on your homepage. As always, whilst my full-time office-based job is investing, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. Well, as we mentioned before, this is currently a rumour of discussions ongoing. There's nothing binding about discussions, and anyone with a pool of capital, whether that be a SPAC, a fund, a strategic investor, can enter into discussions with companies about a potential transaction. There's absolutely no guarantee of anything developing from this. It is just discussions at this stage. As somebody who's worked in this sector for many, many years, oftentimes discussions are held between two parties and nothing occurs from those. So that in itself is important to bear in mind. The transaction may fall apart for any number of reasons: valuation, transaction structuring, seller cash out, seller rollover, board composition, ownership controls. The list goes on and on and on. In short, we're still at the very early stages of this transaction. Don't get me wrong, things can progress very quickly, but it's still very early days. There have been some developments which suggest that actually perhaps there is strong likelihood that something is happening. A number of people have posted Lucid Motors' job board where they are trying to hire investor relations executives. This could be a red herring because an investor relations professional could also help with private fundraisings. However, I have seen other links where I believe they're trying to hire people with SEC experience. That for me is perhaps a clearer sign. You clearly don't need that person if you're going to remain a private company and raise capital through the private markets. So that in itself should be a sign of Lucid Motors' intentions. However, it's not a decision that would be rushed, and neither is it a decision which you would make at the very early stages of a transaction when things are just being discussed. So, what does this mean? Well, at this point in time, ultimately, we don't have sufficient information about the company, we're investing on a rumour, and the recent increase in price has all been driven by hype. The expectation that if the rumour is true and a transaction does get completed, the stock price will rise significantly. Yes, that would be following the trend of many other EV SPACs this year. However, there are a number of things which we, as investors, can learn about the company as more information is released to us. And those are things we need to be really aware of because they can have a material impact on the share price. So even if the transaction does progress, if the investor presentation doesn't give a compelling investment case, there is every chance that the stock price may not reflect the same share price growth which other EV SPACs have seen this year, and the price could even drop back. Now, I am seeing a number of people get FOMO here and trying to chase something. Ultimately, you should not be chasing an investment unless you know exactly what you're investing into and you have a really clear investment case and thesis. At this point in time, we do not have enough information for that to be the case. So, what do we know and why is that important? Now, first up, we know about the valuation. We know it's rumoured to be valuing Lucid Motors at around $15 billion. Now, we obviously don't know any of the valuation metrics at this point in time. However, given where Lucid Motors are in terms of their production output, this is likely to be a very, very punchy valuation multiple. What's more, we know that CCIV is a $400 million SPAC. This means one or potentially more of these three outcomes. Number one, CCIV shareholders in the SPAC will have a very small share ownership of the pro forma entity. Number two, there could be a large PIPE investment into this transaction alongside the SPAC. And number three, and this one's slightly more technical, but bear with me, that $15 billion could be an enterprise valuation figure. What this ultimately means is that the net debt the company currently has is deducted from this figure to give you an equity value, i.e. the market capitalization. If Lucid Motors does have a larger net debt figure, this would mean that the equity value was lower, and then ultimately the ownership in the pro forma company may not be as large. However, that in itself does raise other questions, specifically around the debt, how manageable and how serviceable that is. Again, we don't know, and we need the investor presentation and more information to understand this. Now, the next thing we know is Lucid Motors' luxury focus. Now, it's focused on luxury EVs at the luxury end of the market. All car purchases, wherever in the spectrum they are luxury purchases and are made from discretionary expenditure and discretionary income. History shows that in economic slowdowns, such purchases are deferred and delayed and not made, and that drives a decrease in demand. Just look back to the 2008 global financial crisis and look at the demand for new vehicles there. This is something that for us as investors, given where we are in the current economic cycle, should definitely be front of mind. Unemployment rates are rising, disposable incomes are falling, and ultimately what does that mean for new vehicle demand over the coming years? Now, this is so important to consider, especially when we think about how the company can hit its projections. Now, a counter-argument to this could be the fact that actually those buying cars at this range in the market are less likely to be impacted by this, are more likely to have large savings and can make purchases like this. And yes, that's a fair counter-argument. However, we need to learn more, we need to have more information, and we need to do more due diligence. Now, the next thing we know, and I'm not going to cover it in detail because everyone else has been talking about it and they've all done a good job of that, it's the management team. All of them are very experienced. A number of them have been at Tesla previously, and if any management team can deliver this strategy, I do believe it's them. However, we need more information to know what plan we're holding them accountable for. So, what are the key areas that we as investors should be focused on during our due diligence, and if the transaction does progress, what should we be looking for within that investor presentation? Now, this is my key list. It's by no means exclusive. However, for me, these are the key items that I will be looking into. Firstly, the productions target. How many vehicles will be produced and sold each year? Is this realistic? Now, this is obviously so important because it drives that revenue line. Now, that leads quite nicely onto the second point, which is around the financials, but particularly the cash flow. Yes, it's really important to understand the revenues, the cost line items. However, given where Lucid Motors are in terms of their production and scaling the business, the cash flows are of particular importance. We want to understand the level of cash burn assumed within the model. We need to understand the levels of cash the company has, and from that, understand if there's likely to be a further funding requirement. This is so important to understand because it ultimately means, as investors in the company, we may be diluted. The next point that's important for me is the transaction structure. How much cash are the current shareholders in Lucid Motors taking off the table, and how much are they rolling into the next transaction? What are the key sources and uses of the transaction, and what does it ultimately mean from a pro forma share ownership basis? Another key thing I'm looking for and looking to get a stronger understanding of is the level of execution risk. How much of this plan is truly tangible versus how much of this plan is, bull case, best case scenario. Of course, valuation is so important to understand. We touched on it before, but I'm also keen to learn more about the capital structure of the business, the mix of cash and debt in funding. Now, personally, another point which I'm keen to learn more about and do more diligence on is the other shareholders within the SPAC. Now, as you can see from this screenshot, and this screenshot I've taken from Refinitiv, which is a paid resource, it's run by Reuters, and to access this you have to have a subscription. However, what it does is it breaks down the key shareholders in the SPAC. It's updated on the basis of filings, and when you hold a shareholding over a certain level, regulation requires you to update your change in position. Now, you don't have to continually do that, it's only when you go under or over certain thresholds. However, on the whole, this is pretty accurate. As you can see from the key professional large investors in this SPAC, 20% of the overall shareholder base is what is considered a high turnover level. Now, in other words, what this means is these are shareholders who very quickly buy and sell their stakes. They're typically not long-term investors. Now, before anyone comes at me in the comments and says,
"Oh my god, you're an idiot, they're definitely not going to sell,"
I remind you this is not my own information. This comes from Refinitiv, which is run by Reuters. Take it up with them if you have an issue with their categorization. I did look into the holdings of a number of these investors, and a number of them clearly are very focused around investing in SPACs and using that as a catalyst to exit. However, some of the others do hold very recognised blue chip stocks as well. However, seeing that 20% share ownership is something that we should keep in mind. Personally, I do see this as a bit of a warning sign, and these investors, if there are any lockups, are not subject to those as they're investors in the SPAC. So this is definitely something to bear in mind. Now, one other thing I need to address separately is something that I've seen many people talk about on YouTube, and is saying that Lucid Motors is the next Tesla. Now, in a way, this statement itself is completely absurd and it should not be entertained. If by the next Tesla, you mean that Lucid Motors could be an established and leading EV manufacturer, then yes, I do agree with that statement in part. It's a long road ahead, but okay. However, Tesla is not just the manufacturer of EVs. It offers so much more. It has a massive energy storage proposition, its virtual power plant proposition is very exciting, and there are many more things they do which differentiate it from being a pure play EV player like Lucid Motors currently is. Part of the reason for Tesla's astronomical valuation is because it's diversified in these ways, versus just being solely focused on selling vehicles. So now I've got that off my chest, what am I doing? Well, as I said before, I do have an investment in CCIV. I did make this investment a short while ago when the share price was a lot lower than it currently is, and when there was a lot lower premium over the net asset value than there currently is. Whilst I am aware that there is massive hype around this stock, and that we have seen other EV stocks this year perform very well from a stock price perspective, just because that's happened before, it doesn't mean it's guaranteed to happen again. We could learn anything about Lucid as we get more information if the transaction does proceed that completely changes the perspective of this. What's more, the discussions may not continue, they may not amount to anything. In all honesty, if I was at this point assessing whether or not to make an investment in CCIV, I wouldn't. Unless you have a crazy approach towards risk and reward, I don't think that the current stock price and the premium it has over the net asset value justifies where we are in the process and what we know about the company itself. With negative news about the discussions or the investor presentation not putting forward a compelling case, this could easily drop back down and not fulfill the hype that many people are expecting. So ultimately, let's see what happens. Let's see how this develops. Let's see if the discussions develop and we get an LOI or we get a definitive agreement. Of course, as we learn more, I will do detailed videos addressing what we learn and what that ultimately means for us as investors. But look, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investing related content, then hit that subscribe button. And as always, please let me know your thoughts and comments in the comment section below. There's always some really fascinating debates, discussions and opinions put down in there, so please keep it up. Thank you so much for watching, and I'll see you in another video.